All right, for this week's analysis, let's go on the monthly time frame. All right, remember what we said, we were still waiting for price to give us a monthly week fill actually, because our monthly candle closed bearish and we have a long week that needs to be filled. However, this month is about to close and price is pushed all the way down low. So what's important for us right now is our monthly low. And then let's just highlight the monthly high. Now, let's keep that in mind that there is still a chance for price to go higher, but this monthly candle is invalidating those odds. So for these odds to be invalidated, we need this monthly candle to push lower. The problem is on the lower time frames. All right. Now let's go on the weekly time frame. On the weekly time frame, price broke our first support that price needs to break for the trend to change. Remember, price needs to break 2 supports or 2 resistance for a trend to change. Right now, price has broken our first support, which would be right here. Right. Now, this is our second support that price needs to break for it to go lower. All right. Same thing we discussed in our last weekly analysis. Now, when you go on to the daily time frame, on the daily time frame, price broke out. The only problem I have is this daily candle could have closed all the way down low. However, price still pulled back up. As you can see. Now, wicks are overlooked, but they are very, very important, right? This is a wick that's pulling price back up, that's rejecting a low. It's not a wick that's just there. This is a wick that's rejecting the low. And the same thing with our yesterday's wick. As you can see, this wick, that's not a wick that's just there. That's a wick that's rejecting a high. It pulled back. It's the same thing here. This wick and this wick are 2 different things. They are saying totally different things. This wick is rejecting a high. This is the wick that was just created when a candle opened. All right. So wicks are very important. And this wick is rejecting the low. That means there's a new minor low that was created around that area. If we can just highlight that, you'll see it properly on the lower time frames. All right. So we have a low that was created right here. Now, if we go on the 4-hour time frame, the 4-hour time frame, on the 4-hour time frame, price, our previous candle has been pretty bearish, a strong bearish candle. If our previous candle has been a strong bearish candle, why hasn't price moved lower? Price has still been around that area. We can maybe consider the time. Okay, even if we consider the time, the new the London session is opened. That means price should still be able to go lower, but it hasn't, right? It's just been stuck there. So that means this is a very tricky situation. Price could just be creating a range. Now, if you go on the 1-hour time frame, on the 1-hour time frame, this is where things get pretty interesting. All right. Now, the first thing is, let's just highlight this on the 4-hour time frame. The first thing is price is done 1, 2, 3, 4, and we need a 5. All right. So since we need a 5, that's one thing, right? That's one thing. We need a 5. The second thing, if we go on the daily time frame, remember this is a very strong. If price breaks this low, price is going to go all the way down. So what I'm thinking is price might want to give us a long wick and then pull back up into this area and then possibly go higher for a retest because it hasn't retested, right? And then it can go lower. Okay. Now, first things that we should adjust. this law is now been invalidated. We should put our law right here where our order block is, because price now created a new law right here. Okay, always update your zones. We had a zone right here, then price broke it, and then it ranged yesterday and created a new high right here. So for price to go higher, it needs to break this high, and then it can go all the way up because we have clean traffic. All right, so now that's our updated zones. If we go on the 1 hour time frame, 1 hour time frame, if we go on the 1 hour time frame, price can potentially do what we're talking about. It will go low, right? Leave a huge wick below down here and then come back into this range. So what you want to do is you want to take advantage of the trade down and advantage of the trade up. So the most important thing that you need to do right now is we already have a setup that's been presented to us. Okay, price created a high, right? And then it fell and it went up, created a new high, right? This high is lower than this, so it created a high low. If price is creating a high low, could this potentially be a new high low for price to go lower? Possibly. Okay, so now since price 3 vector candles, price has been ranging, and that provides room for price to go lower. All right, so the confirmation that you have, that you need right now, you need a candle to close below here, and that will be your confirmation. Right now you have a signal. Now you need price to close below here, and that will be your confirmation. Your first target being this area right here, this wick fills right here. After you have that target, the next target that you can watch out for, the next target that you're targeting is the initial low. When price reaches this low, right, this low that we have right here, when price reaches this low, right, you wait. You need to wait and see if price is going to stay below, close below and stay below, or pull back up. If it pulls back up into here, then you know price is coming all the way up here. So what price might do is it might create a range between these two areas, and as long as price is up here and not above, you can short it all the way first to the middle area target, and then lastly the initial target, right? And then when price gets here, and if it doesn't stay below, you can buy it all the way up again. So that would be a range to take advantage of, because we all know gold, it likes to range a bit before it makes any major moves. All right, so that's the first thing. Now for the bullish setup, as you can see, for the bullish setups, as you can see, price is at a mid support. This is a mid support, right? Because price is above, so it's still a support. And this support is holding quite strong. If this bullish candle that's printing right now, this candle that's printing right now closes bullish, that means it's close. The bullish is getting stronger than the bearish candles, as you can see right here. These bearish candles, the bullish candles will be stronger. So if they are stronger, then price could have went up, right? Came to retest, or just came back to the low. Now, since this is just a low, and price could potentially just be ranging in between these areas. So it's a low that's being rejected. You can buy it to this high right here, your first target, and your second target being the initial high, and your stop loss just below here. So you need to use lower time frame for confirmations, or you just need to use lower time frames to your advantage. Like right now, if this 30-minute candle closes up like this, right? Because if you look at this candle, like I said, wicks are very important. And this wick is rejecting the low. This wick is not saying I want to go down. This wick is saying there's bullish pressure, but I'm rejecting the low. So if it's rejecting the low and this candle closes bullish, you can buy price, and off that price, your first target, this wick fill, second target, third target, right? Your stop loss just below here. But the moment price goes above here, make sure you move your stop loss to maybe somewhere here. because you do not need price in this weak range. The moment price gets in this weak range, it's invalidating a lot of information about our buys. So the moment price goes above here, you move your stop loss a little bit higher, just in case if price wants to keep ranging around that area, right? You don't lose way too much, because let's say if you buy all the way up here and your stop loss is all the way down here, and then price keeps ranging, right? You're not using the game to your advantage. So you need to move your stop loss as price moves, all right? That would mean that you are moving with the price. So as long as price is staying around this area and we don't have something legit just yet, it's best to just wait. So we have signals right now, we need confirmations, okay? You just need confirmations, and then you can take advantage. If you want to buy low, you can buy from here and all the way to the top. But if price comes below, you're now selling to our next target. But if it does not, if it stays above, you can buy, all right? So watch out for price when it pushes low. When it pushes lower, when it reaches our next target, just wait and see to see if price will pull back up and leave a huge wick. If it leaves a large wick, right, and then it comes back and closes above here, look to buy, your first target being there, and then you can even have a second target to up to here. And when price reaches this area, you wait, all right? Because right now, what you need to do is you need to use patience to your advantage the most in this case. Okay, so as long as price is above this area, price is trying to reach this area, we're still buying. I will not expect price to reach this area if price hasn't broken below here. Price needs to break below here, leave a wick somehow, then we can expect price to reach this area, okay? Now keep in mind that we have this law. Don't overlook it. We have this law that was created, right? So price also needs to close. That's why our first target is right here, because price needs to close below that low for it to go lower to the area that we want it to. So keep those factors in mind. Be patient. Don't rush it. If you open a position, and just hold it. Keep your stop losses and adjust them accordingly to what new information you have. Just be patient. All right. Okay, we'll update you when we have more information. But that's it for now.